Well, I'm going to present you with an option strategy using August options on the SPY. And this is in response to a common question I get. I presented a number of options strategies so far, and I always structure them so that they're free or that they're debit to me, that I get paid to do it. And I've been asked whether I ever just buy a call or just buy a put. Yes, I do. And it's used for a very particular purpose. I'll use this when I think that we're range bound for a while, but volatile. And I believe that's where we are on the S&P for at least probably the summer. I don't see us really breaking out of this channel that we're in. I think our breakout will be to the upside until we get into September, October. I think then we'll start to move higher, but I think we're range bound. So let me show you a nice way to use just a call. Well, actually, I'm not going to say a put. To use a call, we're gonna buy a call on the S&P, and then we're going to let the market tell us what our next move is going to be. And I like doing it this way because regardless of which way the market goes, I'm indifferent. If the market goes up, great. If the market goes down, okay, I have a strategy that I'm going to use when the market goes down. So let's, before we begin, have a look at the line at the bottom of the screen that I drew. It's a continuum anchored with 2 points. On one end we have hope, and on the other end we have reality. And this is the way I see the market today, and the way I see investors looking at the market today. And the X here, 3130, that's where the market closed before the July 4th long weekend. It's July 3rd as I'm doing this. As the market pulls down to the 2960 to 3000 range, market participants begin to overweight hope. They start to think, well, the central bank is going to step in and announce something else. They have twice now. Every time we've visited that 3000 mark, there's been some announcement of something more that's going to be done. And I think they're going to keep doing that. When the market retreats to that level, they'll put out another statement about, well, we're going to do some of this now, and we're going to do some of that. And I think they're going to keep expanding their balance sheet. Consensus seems to be, they're at 7 trillion now. That 10 trillion is not out of the realm of possibility. That's a lot of money squeezing investors out of money markets, out of bonds. If they begin yield curve control, it's not just the money market that they're squeezing investors out of. They'll sit on the 2-year and they'll drop that down, and they'll sit on the 5-year and drop that down. If they have to, they'll sit on the 10-year and drop that down. Being that the market is going to be overweight hope in the 2960 to 3000 range, I want to be overweight the market at that point in time. So I think that this is a nice area to look at for selling puts in that range or slightly behind that range. As the market pushes higher, the last height we hit was 3200, 32 to 3225. Hope sort of fades away and the market begins to overweight reality. And the reality is this virus hasn't gone away. The reality is that the moment we open the doors, everybody wants to get back to what they were doing, and up go the number of cases. And we're seeing that even though in some places government hasn't said shut down, businesses are volunteering to shut down as well. So that's going to continue on. That's going to continue to be a problem. So we're oscillating right now between hope and reality, And I think that as we get closer to reality, if the reality that we get close to is the reality we have today that we're seeing, I think you want to lighten up. I would not short these markets. Again, I've said this many times. It's a strategy that has saved you a lot of money by not shorting these markets. If you have been shorting, it works on certain days, but overall, the force of the money is to the upside. That's where we want to stay. But lighten up. If you're uncomfortable with the level of the markets, if you're at this level of reality where we're overweighting the reality and we can't help but see all of the headwinds, how can we push to newer highs and even get to where we were before this happened when we're nowhere near where this happened? I'm with you on that. Lighten up. Don't short, but lighten up. You're going to want to lighten up when we get close to reality. You're going to want to overweight when we get close to hope, because this is what we're going to oscillate between. We're going to oscillate between hope and reality. Hope has great support around 2960 to 3000. Reality has a lot of resistance around 32 to 32 and a quarter. Now, I don't think hope is going to change, but reality will change. As each day goes by, there are lots of places around the world, lots of smart people working on some kind of vaccine. Lots. You don't want to wake up one day and find out that, hey, listen, we've solved it. We've got it, and we're ready to go, because we will pop. So as we get closer to reality, you have to continually reassess reality and ask yourself, does it matter? Can we look past this right now, or is this just too big of a hurdle? That's sort of a subjective call that you have to make, but my strategy accounts for that. So let's have a look. Okay, so I'm looking at the August 21st options. That's 49 days away as of today. Today's the 3rd, so 28 days left in July, 21 for August. We have 49 days to get there. It's actually 47 because Saturday and Sunday you can't really do anything, so we really shouldn't be counting until Monday, but there it is anyways. SPY is closed at 312.80, call it 313. If I wanted to buy a $313 call for August expiration, I'd be paying $10.70. I'd have a delta of 0.52 on that one. The delta, don't worry about the delta. I'll get to that a little later. But look at the cost, $10.70, which means the market would have to get to 323.70 or above, or get to that point of reality and slightly above reality and break out before I can make any money on this. I don't think so. I think we'll visit reality a few times, but I also think we'll visit hope a few times. But I'm going to buy a call at 313. Now, typically what I would do if I bought a call is I'd use a debit combo. I'd go long the 313 call, and I'd short two 293 puts, because this is just on the other side of hope. We'd have to punch down through hope first to get to 293. And again, I think we're well supported in 296 to 300 range on the SPY, because hope is very much alive there, and there will be a lot of overweighting at that point. You'd have to punch through all the way to 293, but I'd get a free position. It would cost me negative 14 cents, so per contract, I would get $1.40 in per contract on that one. The other thing I can do, if I feel that reality is just too strong, but I think we're going to visit reality at some point between now and August, is I can use a bull spread. I can go long the 313 call, and I can short a 330 call. The combined amount of that would cost me $7.78. I'd still be putting out $7.78. That's the 330 call for 17 points of upside. So I'd be betting almost $8 for 17 of upside. But I am betting that we're going to hit reality and go past reality with the 330 call with that bull spread. I don't know if that's really realistic. So I'm not a big fan of the bull spread on this one unless I really feel that we're going to break out. Revisit me in September. I probably would say a bull spread makes a lot of sense at this point, because I do think that we can break above reality, depending on what reality is at that point. If we take the summer and we pull back and we distance and we do all the right stuff, we might go into the fall with a lot, with reality being a lot friendlier to more upside. I don't know. I'm not going to forecast. I'm going to let the market dictate to me what I'm going to do. I'm going to take one position, and then I'm going to wait. And I'm going to say, okay, Mr. Market, what do you want to do? And depending on which way it goes, I know what I'm going to do next. So let's do that. All right, so this strategy starts with me buying a 313 call for 1070. Right away, I'm going to buy the 313 call, but that's all I'm going to do. Then I'm going to wait for the market to make its move. I think we're going to have heightened volatility throughout the summer. Again, I think we're going to visit hope and reality a number of times. I think we'll oscillate between the two. So once I take the position, which way the market goes, I don't really care. If the market goes down, I will sell puts 20 points lower from wherever it goes. Notice a 313 call here. If I go 20 points lower to the 293 put, I can get a free position. I can sell 2 puts against my call and get a free position. And if it is put to me, well, I want to be long right when hope is really overweighted. So if the market starts pulling back, I do expect the central bank will be standing right there at the 3,000 line, somewhere between 29.60 and 3,000, saying, stop, turn around. So I'm going to be just behind them. I'm going to have them standing in front of me. So you got to get through them to get to me first. I feel good there. So let's say the market pulls back all the way to 300. Well, I'll go 20 points lower at 28. This relationship here, by the way, the deltas and the cost should still hold, being that this is 20 points away. That type of relationship should still hold. The longer it takes to get there, though, that 20 points will become 19, then 18, then 17 because of time decay, right? But that's okay. I'll end up having puts lower than 293. So I'll let the market determine what I want to do. So I could buy the 313 call, sell the 293s, and then sit and wait. Or I could just buy the 313 call and let the market tell me what I want to do. If the market drops, guess what? I get my puts lower. I still get a free position because I'm going to sell 2 puts to pay off the call, but as the market's dropping, the premiums on the puts are increasing. Maybe it drops enough so I only have to sell 1 put to cover off the price of the call. Great. I don't mind being back there in the market if the Fed is in front of me on the way down. If you got to punch through the Fed to get to me to exercise the puts, I feel pretty good. That's my big friend in front of me, by the way, right? Let's say the market goes up. Well, I'm long a call. I don't care. Great. I'm long a call. Thank you for that. Let's say it goes up and it hits the 32.20. I can sell my call. At that point, being that delta has 0.52, when you figure out what gamma is at 90 points up on this one, it's roughly about a profit of about 610 to 620 per option. So if it gets all the way to where we were, if we revisit that level of reality, I've got about call it $6 per contract. I have a choice to make. What got us there? What does reality look like now? Is reality 100 points higher? Or is reality really strong right there? Is everyone saying, I don't understand why we're here? If that's the case, I'll simply take profit. I'll lighten up, but I won't go short. I'll simply just lighten up. Not only that, if it drops first and I sell these puts and then it rallies up to actuality, I'll be in profit on my calls, but my puts also have a profit because the premiums will have decreased on that even better. When I do this strategy, I hope it goes down first. Let me grab that leg and then go up and make money on both legs. But if not, the market can go down, great. We can go into next week and the market just goes up. Okay, I'm long a call. Now I have a choice to make. If I think that reality has another 100 points to the upside, what I can do is I can go all the way up to 330 and I can sell the calls. The calls at that point, right now the calls aren't worth 615 at 330, but if the market moved from 313 or 3130 to 3220, the 330 calls on the SPYs would be about 615. I can sell those to offset some of the costs that I've already experienced if I think that reality is 100 points higher. Well, great. There I go. So what am I betting? I'm betting $4.55 after you take the 1070 minus the 615 because that's what it'll be when I get there. I'm betting $4.55 for a $17 move. Worst that could happen is the market tanks on me and I lose $4.55, not 1070. That's up to you. That's why I have a big question mark here. When we visit reality, what do? And you have to assess reality. You may say, but I have no skill in assessing reality. I really don't understand why the market does what it does. Take profit. Just take profit. If you have a skill in assessing the market, and if the tone sounds positive, and if the news is positive, and the jobs report next month looks good and overcomes what we're doing, and if we start to see the number of cases drop and the news on the vaccine front starts to improve and there are more trials in phase 3 that are looking promising, maybe reality is 100 points higher. Well, then you can enter into a bull spread. You can put the second leg of your trade on and now you have a bull spread. So I hope that helps out a bit. I do at times just buy a call. with no intention of just owning the call. The intention is I'll buy a call because I don't know what's going on. I believe in the upside, but there's always downside. So I'm not going to finance my call just yet. If the market goes up, I make money. If the market goes down, I get to finance my calls at an even lower strike on the put. I have a free position, worst case scenario, right? So that's it. Oh, one last note. A lot of viewers have been saying that they want to buy hats. And we don't have any kind of merchandise program at all. The hats we have and the shirts we have are really just for internal use. We haven't really done anything with that. But we will sell the hats to Canadians and Americans in North America, only because of the shipping. In looking at the cost of shipping, it is unbelievable how much it costs once you leave one of the coasts and start heading over an ocean. The costs go right up to the point that it's not worth it. So in North America, we can handle that. However, I won't be selling them. I've got a surprise for you. 2 other people will be selling them, and they're going to give you their little pitch in about a week. And then I think we'll keep the selling season open maybe for about 3 weeks or 4 weeks, and that'll be explained in the video why it's a short window. But if you're interested in the hats, it is coming. All right, that's it.